Thank you for joining me. I'm Alex, and I want to talk about Facebook. Now, Facebook has been affected in much the same way Google has to the current situation. They're not directly affected, but they make pretty much all of their income with advertising. And if there's companies that don't have the budget to advertise because they don't know where their business is going to be in 6 months, then obviously Facebook suffers a bit. So what Facebook does is Facebook, also Instagram. Current price is $165, which gives them a market cap of just under $500 billion. So obviously not a small company. Dividend is 0. I don't expect that to change anytime soon. Within 10 years, maybe, if they really don't find anything better to do with their money. But I don't want to speculate, and I don't want to count in a dividend that might never happen. Revenue, $71 billion, up significantly. Earnings, $18 billion, down significantly. But I don't expect that to continue. PE 26, forward PE 18, which obviously speaks to future earnings growth. And that is huge earnings growth of like 25%, 30%. Over 30% actually. So obviously things are heading in the right direction as far as anyone's concerned. And forward PE of 18 seems reasonable, but it's actually pretty huge for a company that's growing at this pace. And I wouldn't have expected that you can pick up Facebook at a forward PE of 18 at any point. Total assets, $133 billion. Total liabilities, $32 billion. Both up huge. Total stockholders' equity, $101 billion, which is also up huge. And so overall, I would say that literally everything is going in the right direction. Obviously, earnings, small setback from the previous year, but it doesn't seem like that's affecting them long term. So revenue growing huge. And that's a huge indicator that things are going in the right direction and that you might want to consider the stock. Forward PE of 18 is pretty nice, especially for a company that's growing this much. Current PE of 26 would be too high for me, but a forward PE of 18 is always nice to pick up. Assets and liabilities and the whole balance sheet looks pretty amazing. So overall, I would say that if there ever was a time to buy Facebook, it would be now. I personally don't really like Facebook because it's basically a website, and it's increasingly becoming a website that people don't want to use. It's just that people have to use it. And so as more and more social media comes online and is trying to increase their own market share, things might at some point reach a tipping point, and that you will not really see coming. So obviously Instagram is a huge social network by itself and doing something completely different. So Instagram and Snapchat are kind of competing on that front. YouTube is kind of a social media network, social media network. So I don't expect YouTube to really put a dent into Facebook, but I do think that there is potential for a future competitor to actually grow quick enough to take market share away from Facebook. On the other hand, Google has tried and failed, and if Google can't do it, can anyone? Who really knows? Either way, I would say that for now, Facebook seems like a very safe stock. It seems like a hugely growing stock, and a stock with amazing balance sheet, growing revenues, decent PE. So overall, I would say that if you were ever at all inclined to buy Facebook, I think that now would be the time to do it. Or since they just went up 7% yesterday, would have been the time to do it. But, you know, I can't see the future. So that's it for me for today. If you like this video, make sure to subscribe and come out with more videos every day before market open. I hope you have a successful day.